But the junior miner DRD Gold's full-year headline earnings per share from continuing operations increased 259% to 61 cents per share. So the group's gold production in the fourth quarter down 8% at 32,200 ounces. That's from the previous quarter. Niel Pretorius, CEO of DRD Gold, joins us on the line from the JSE to unpack the group's results. Good morning, Niel. These big percentage increases, on the other hand, we are talking cents, so is it fair to say off a low base? But are you pleased with the results?
I think I'm encouraged by the results in the sense that this was a year of big operational changes. We decommissioned 2 plants. We just finished a pipeline project that's in the process of being stabilized and delivering into stabilized production flows. And I think we were anticipating maybe slightly weaker financial numbers. So these financial numbers are very encouraging.
Right, and looking at the operations, I was saying when we were previewing the companies we were going to talk about this morning that DRD Gold, rather different to the other bigger miners, a lot of your names, if you like, the brand names in your portfolio are very old names. You've got Ergo, which was that reprocessing operation, I think from the 1970s of the old mine dumps. ERPMs, that name comes up. And even the Top Star drive-in, remember the drive-in on top of the mine dump? That is a depleted resource for you now. So just give us a flavour again of the kind of operation you're doing. Lower costs than the deep miners in one way, less safety issues than the deep miners as well, because you're mostly on the surface.
I think the biggest advantage that we have is that we have continuous shifts. We don't have interruptions. It's a 24/7 kind of operation, and it's mostly mechanized. I think that's where the biggest risk for South African mining currently lies. The underground sector is in the sense that you don't really get to mine an adequate number of shifts to really achieve the results that we were used to in the past. So our biggest advantage, I think, is that we are mostly mechanized, uninterrupted, with on-surface resource, and it's a vast resource that can carry on for many, many more years. And our infrastructure is in the final phase of recapitalization. You talk about the old Ergo plant. I think the only part that's left of the old Ergo plant are the foundations. For the rest, it's a whole new thing. And it's working nicely. It's giving us the yields that, we're getting towards the yields that we had set out to achieve when we commissioned this project.
Niel, with me is Nerina Visser. Nerina, you got a question for Niel?
Yes, Niel, mine probably relates, it's almost 2 questions, but it both relates to sentiment. I'd like to check with you how you feel. I believe that there's some demands from NUM coming through in terms of wage demands, possibly a spillover from what we saw in the platinum industry. So I'd like to hear about that. But also a large proportion of your shareholders are actually American through the ADR program. Do you get a sense from your international investors and shareholders that they are concerned from a sentiment point of view around what's happening in the mining industry in South Africa?
Well, with regards to the labour issues, I think at this stage a stable NUM branch is really what you hope to have at your operations, because they've been around for 30 years, they understand the business, and I think they know more or less how far they can take you. And then that's maybe the biggest weakness too, because you have an anarchist type of union appearing on the scene and making irresponsible demands and getting people all psyched up about that. But we're in the middle of a 2-year wage cycle. We'll only be negotiating wages next year this time, so we don't foresee any labor issues for the next 12 months. On the American sentiment, we've been paying dividends for 5 years, and I think, whereas in the past our company was one of a small number of companies that offered huge volatilities associated with our product price, volatility has sort of become par for the course, and it looks as though people are starting to become a little bit more conservative in their approach, and that dividend yield and earnings are slowly making a comeback in driving investment decisions. The concerns that we are getting from our U.S. shareholders obviously involve the labor issues in the Northwest province, the Marikana-related issues. And I think there we try to explain to them the political undertone, the approaching elections, and the fact that this is probably more of a disruptive type of union with a political motivation as opposed to a bona fide representation of labor demands.
Byron Ott is also with me. Byron, you got a question for Niel?
Yes, Neil. We know that one of your big advantages are that you majority surface mining, which is obviously cheaper, easier and safer. But how long-term sustainable is that? We know that surface gold is depleting, and are you guys able to adapt to shifts in that?
Yes. Look, I think it's not an easier type of mining. It's just a type of mining that in South Africa today it's not susceptible to the sort of risks that are making our mining industry less and less attractive, especially for external capital, because we have a continuous process and it's a mechanized process, and there's no interruption because of public holidays and so forth, and it's a 24/7 process, as I said earlier. We've been doing this sort of thing now for the last 30 years, and we've just made the step change now into a much larger volume-driven business, having acquired Ergo and having refurbished Ergo in the last 4 to 5 years. So the process is one that our people are very familiar with. I think we probably have the best skills in the industry to do this sort of mining, and they seem to be taking this in their stride. The ultra-volume environment is one that they've adapted to quite nicely, and the priority of getting to a stabilized status is very much, I think, within the near-term time horizon for us.
Neil, just to go back finally to the share issue, you repurchased 58 million rands worth of shares, which says that you've got some cash firstly. But also, repurchasing has been in the news a little bit, and questions have been asked about the motivation for it. And on the one hand, it seems to add value. But what is the motivation there, and is there anything that we need to know about that?
Well, it's twofold, really. On the one hand, a large percentage of our shareholders are resident in the United States, where they have an ADR program, and distributing dividends there is quite expensive. We're in discussion with our ADR program, the entity that manages the program for us, the custodian for the program, see if we can do something about the fees. But also, it's simple and straightforward, to just simply buy back shares, and we're doing it not just to reduce the number of shares and return some capital to shareholders, but also it is to offset the dilution effect of managers or share option holders exercising share options. So it's cheap, and it's also it avoids further dilution.